turbulent US markets catch investors off guard, but not InstaForex experts. The US stock market closed in the red yesterday. All three benchmark stock indexes took a nosedive and closed 1.3 and 1.5% down from their closing levels on Tuesday. As a result of fierce standoff between the buyers and sellers, the plunge was sharp. The S&P 500 missed just 0.5% from its historic closing high. However, the index tumbled by more than 2% from its record high. Earlier, the index seemed to be firmly on a path to it after the Fed's policy meeting. The S&P 500 lost 70 points, or 1.47%, to close at 4,698 points. The stock indexes accumulated strength in the New York pre-market, getting ready for a further climb. They rebounded by 0.5 and 0.7% before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,700 and 4,748 points. The exit beyond the borders could push the index down to 4,670 or up to 4,770. Our analysts warned you that the rally, which is not based on solid fundamentals, is doomed to fail sooner or later. At this stage, we are not speaking about a change in the market sentiment. Wall Street is going through an expected downward correction. As for the economic calendar, a jump in consumer sentiment in the United States and sudden growth of existing home sales encouraged an intraday rally on Wall Street yesterday. Eventually, the major stock indexes topped out. And speaking about other reasons behind the drop in the indexes, some analysts reckon that a sell-off was triggered by a massive buying of put options contracts on the S&P 500, including put contracts which should protect the index from its fall below 4,755 points in the late session. Market sentiment was also dampened by a plunge of FedEx shares by 12.1% because of the delivery company's quarterly profits fell short of the estimates, so the company cut its revenue forecast for the year ahead. All 11 major sectors of the S&P 500 index closed in the red. The stocks of US retailers incurred the steepest percentage decline. Alphabet shares added 1.2% after the company announced a restructuring of Google's ad sales division. Futures on the US stock indexes rose on Thursday, recovering from a broad sell-off on Wall Street. Investors bought the indexes on the dip, enjoying a more optimistic forecast from a chip maker, Micron. Micron Technology forecast quarterly revenue above market estimates, and the company's shares jumped by 5.5% before the opening bell, driving up sector heavyweights, Nvidia and advanced micro devices, which added more than 1%, lifting the big tech segment. The revised US GDP data for the third quarter was a surprise, being lower than the second estimate. The Commerce Department reported that the US GDP grew less than in the second estimate. In the third quarter, the revised GDP stands at 4.9% segmentally versus the expected 5.2% growth. At the same time, it's way stronger than the 2.1% increase in the second quarter. The labor market remains tense and stubborn. Weekly unemployment claims again discouraged the market. First-time jobless claims rose by 2,000 last week to 205,000. The figure is close to 2 months low, but below the consensus of 215,000. The manufacturing index by the Philadelphia Fed for December came as a surprise. Instead of the expected improvement in the industrial climate, the data reflected a sharp deterioration. The index fell to minus 10.5 in December from a minus 5.9 in the previous months, while the market expected a recovery to minus 3 points. This is the 17th negative reading for the index in the past 19 months. The new orders index dropped sharply from a 1.3 to minus 25.6 in December. The supply index rose by 7 points from last month, but remained negative at minus 10.8. Meanwhile, companies continue to report largely stable employment levels. This batch of data accelerated the recovery of the stock indexes. The corporate sector also supported the positive sentiment. Boeing shares rose by 1.9% as the plane maker is set to resume deliveries to China within days after a 4-year freeze. US electric vehicle makers such as Tesla, Nikola and Lucid Group gained between 1.2% and 4% after it was reported that the United States was considering raising tariffs on the Chinese electric vehicle makers. As for the currency market, the fresh economic data has aggravated the dollar's position. The US currency, which had been desperately trying to recover for several days, came under silent pressure again. The fresh statistics accelerated the greenback's losses. By the opening bell, its index had lost about 0.55%, falling below the 102 level. It sank to 101.90. The instrument is likely to fluctuate in the intraday corridor between 101.70 and 102.20. The Canadian dollar is hovering around 1.3340, and the loonie is certainly benefiting from the US dollar's weakness. The USD pair slipped by 0.29% to open the New York session at a 1.3329. The intraday corridor for the instrument is defined between 1.3290 and 1.3360. The Bank of Canada's summary was released yesterday. Policymakers agreed that monetary policy would be sufficiently restrictive to achieve the inflation target, the minutes said. However, they also agreed that risks to the inflation outlook remain and the policy rate may still need to be raised, the minutes read. Considering that the meeting itself took place in early December and further inflation data showed the stability of prices and the presence of a discussion regarding raising rates may support the loonie, the cryptocurrency market has also entered positive territory today. Crypto assets showed quite impressive intraday dynamics. Bitcoin seems resolute to test recent highs. By the opening bell, the flagship crypto was up 1.6% at 44,169,000. According to the forecast of our analysts, if Bitcoin manages to reach the high of 44,200 today, then the asset can quite sharply climb to 45,000, and targets for the peers are $43,600 and $42,700. You have watched a daily review of the New York session on the InstaForex TV channel. Leave your comments and ask any questions. Good luck in your trading and see you online tomorrow.